It's time now for Real Estate Update. With Usha Chandra of GlobeNet Realty, real estate is our world.
Ladies and gentlemen, once again, welcome to this very exciting segment, the weekly real estate update with Usha Chandra, exclusive to Australian Indian Radio. And with that, welcome to the show, Usha.
Thank you so much for having me on the show, Umesh Chandra and Australian Indian Radio.
Hi, it's always a pleasure to have you on the show. And today we will have a slightly different show, meaning let's talk about something which everyone is worried about or concerned about, and maybe many coming to terms with the interest rate and the interest rate hike that has just been announced. So, if we look at the cycle, the hiking cycle and the growth rate with the RBA, what has this period been like?
Yes, let's have a quick look at the report from RBA. I know a lot of people are worried and concerned about the interest rate going gradually high every month, basically. At the last February board meeting, RBA lifted the cash rate further 25 basis points to 3.35%, continuing the fastest and largest rate hike cycle on record. The cash rate has jumped 325 basis points since moving off to the record lows in May last year. Tuesday's cash rate rise was broadly expected, but trajectory of the interest rates over the coming months remain highly uncertain. It is tied to the outlook of inflation, which is shrouded in uncertainty. Headline inflation 1.9% and annually was 7.8%, came in below RBA's forecast for the December quarter. But the more critical core inflation reading was 1.7% and 6.9% annually, based on the timed mean was higher than forecast. However, core inflation was slightly down from the September quarter to 1.9%. To add further complexity to the outlook, the Melbourne Institute's monthly inflation gauge rocketed 0.9% higher in January, up to 0.2% in December, although the monthly reads can be violent. So looking at the interest rate, the people are very concerned. A lot of buyers and people who are borrowing money in renters, they're all concerned about the interest rate. So going high so fast and so quickly. And as you know, the rental market and the sale market, the people want to buy it, but they can't afford to buy at the hike of the interest rate.
Well, looking at the interest rate, as you mentioned, and today we are discussing interest rate, and it's all about inflation, as you mentioned in your opening remarks. And if we can control, and this was good thing was to see that it had gone down a few basic points, which is good to see. So it must be coming to or we hope that it is coming to an equilibrium where it is now stabilizing. Well, of course, so we know that moving forward, all this, what's happening in Australia, what's happening locally is also influenced by the global pressure. What happens overseas, all the global uncertainty that happens, mainstream forecasts, etc. So what role has global pressure got to play with these rates?
Yes. Looking at the global pressure, it's extremely important. Global inflationary pressures are easing, and domestically a relative weak December retail spending results could be the first clear sign that consumers are regaining from the spending. So a lot of consumers are not going to spend a lot of money because of the interest rate and the inflation as well. Additionally, the housing component of CPI, which has the largest weight of any subgroup, dropped sharply through the final quarter of 2022, albeit from the highest level since the mid-90s, outside of the impact of the introduction of GST in 2000. Mainstream forecasts for the cash rate reflects the uncertainty around inflation outcomes, ranging from the RBA holding the cash rate at 3.35% through the another 75 basis points of hikes. However, recent survey of Bloomberg puts the medium forecast at 3.6%, implying on one more hike of 0.25 basis points in the wings. So we're expecting another rise as well of basically 25 basis points. We will receive some guidance on how RBA sees the inflation outlook in the statement of monetary policy, which will be released hopefully this week. So looking at the global pressure is everywhere at the moment. So that's what the inflation is doing throughout the world as well. So Australia has to follow the global thing as well.
Of course, these days we are all part of that big global picture and the global family, as it's mentioned. And it will be wonderful to see what the outcome of that monetary policy will be like, because we know that the RBA meets once a month, and of course on the Tuesday that look at the inflation and then adjust the interest rate. But the monetary policy moving forward will form the basis on how moving forward where we are in comparison to inflation. The whole exercise about this was to bring inflation under control. Well, of course, then we have looked at the global pressure. Now, the other thing that people always talk about is that the impact it's going to have on mortgages and, of course, the employment sector, the employment market. So how is all this shaping up and taking effect on the current interest rates?
Yes, looking at mortgage and employment, they go in hand in hand. The latest rate hike takes recent borrowers outside of their serviceability assessment at the time of origination. Since October 2021, lenders have assessed new borrowers on their ability to service the mortgage under an interest rate scenario that is at least 300 basis points above their origination rate. The latest lift in the cash rate will push these recent borrowers beyond their serviceability tests. Considering most lenders are showing mortgage arrears to be around record low last year, is likely some evidence of rising mortgage stress and will emerge in 2023. Under such substantiability, higher interest rate settings, with the potential of the more noticeable lift as further fixed rate borrowers migrate over the variable mortgage rates. However, any material rise in mortgage arrears is unlikely unless labour market loosens substantially. Forecast for RBA and Treasury as well as the private sector have the unemployment rate holding below 5% over the forecast period, and well below the decade average of 5.5%. Again, we'll see some further guidance on labour markets when the statement of monetary policy is released this week. Hopefully, we'll be looking at more information for next week's topic. So that's what the mortgage and employment is doing, and the annual holding below 5%. So.
Now that is a good sign there, the employment, which is at 5%, which is to me, that would probably bring about a lot of confidence for the people to invest, go into their houses, even though the pressures are there with the interest rate hike. But again, people know that this is the cycle and it keeps going. So in conclusion, let's take a look at what is going to, how it is going to affect the mortgage repayments and what it's going to add to an average loan in coming years, and what would be the conclusion for this month's interest rate hike by RBA.
Yes, looking at those with home loans, the latest increase adds roughly $77 per month in repayments up to $500,000 variable rate owner-occupier mortgage and $116 per month to a $750,000 mortgage. Since the recent low points in April on the same loan amount, repayments will have increased by approximately $821 per month and $1,232 month respectively. For the housing sector, higher interest rates represent a further downside risk of purchasing activities and values. Although it's reasonable to assume that most Australians have already priced in today's rate hike. Arguably, a peak in interest rate should support the rise in consumer sentiment and gradually stabilization in residential property prices and activity. However, it's unlikely housing values will start to appreciate until either interest rate comes down or another form of stimulus becomes apparent, such as an easing in credit policy and demand-side incentives. The recent national peak in home values was in April, with values trending lower as the interest rates moved off their emergency lows in May. Since then, national home values index has dropped by 8.9%, the largest and fastest decline on record, which followed one of the fastest and most significant upswing on record. Home transactions have also trended lower, with estimates to the end of January putting the annual number of sales down by minus 19.1% relative to the same period a year ago, but holding 4.6% above the previous 5-year average. So looking at the home loans and the interest rates, people have to pay more for their mortgages, or even speaking about rental, the rentals have gone up as well, so people have to pay a bit more rent each increase. I mean, we are doing lease renewals at the moment for the next coming months, and all the owners want a little bit of increase, maybe $20 to $50 to $100 per week, because they have to pass it on to somebody else, and the tenants have to pay that sort of rates to keep their houses as well. And the owners have got a mortgage, so as you know, that when the interest rate goes up, people are all suffering in the same way.
Well said. And of course, looking at those trends, that the home transaction have also trended lower, which is the sales numbers are down minus 19% relevant to the same time last year. But if you look at the 5-year average, it is above still 4.6%. So from there it is okay, but because it was peak in the last few years, then from that point is minus 19% in number of transactions. So that's a big drop from that period. But if you look at in the broader scheme of things, over the 5-year period, it is still holding at about 4.6. So that is quite good. Well, okay, let's end this segment today with an area report of what's happening in your side of town.
Yes, we are based in Boondall, north side of Brisbane. The market is slowly picking up. We have got a couple of new listings. We have sold a property which has been on the market with another agent for about 4 months. We have got that one unconditional at 12 Daloon Street. So that one is sold, and we sold the other one at 211 Pine Tree Close. That one has just settled. So we have got a couple of new listings. We have listed a property at 37 Longbill Place, which are sold in 96, and now the owners, we have been managing since then. So now the owners have decided they're retiring. They have decided to sell that one. That one is a very good investment for $630,000. It's on 450 square meter block, 3 bedrooms, 2 bathrooms, 1 car accommodation, location, currently rented with the same tenants for 7 years. So that's a great investment for if anybody is looking for investment property. So open houses, we have got couple. That one, 37 Longville Place, we have got open house this Saturday, 11 to 11:30, and we have got another one which we have listed, new property at it's a townhouse, 3 bedrooms, 2 bathrooms, 1 car, and that's on the market for $499. It's open at 12 o'clock this Saturday, and that one is rented for $470, and we are looking offers over $499. So those two are the opens. Rental demands have been extremely high. We had a couple of properties we have rented it already. At the moment, we don't have any rentals available for renting. We've got 2 coming up. Both are in Deegan, and we'll be talking about it on next week, because both the owners are doing some maintenance work on those 2 properties. So we have rented out 23 Gladstone Street just yesterday and 24 Annesley Crescent this week. So those were the 2 properties rented, and they're both rented for much higher figure which than previous tenants were paying. So that's the area report for our area. And if anybody is looking for selling or renting or investing, please call us on 3865 4466, and one of us will be able to assist you and find you the right property. Thank you so much for having me on the show.
A $750,000 loan will be paying more than $1,400 extra in repayments each month. That's almost $17,000.
Radio and Usha Chandra.
And thank you very much for being on the show, and that's very informative session today on the interest rate, which is very topical because it just happened, and I think it's a good information to disseminate out into the community. Well, hoping all the best for the coming weekend and all the opens. So right now it's time to say goodbye from this segment. Until next week, it's goodbye.
GlobeNet Realty. GlobeNet Realty has been the longest established, trusted and respected agency in its trade area. Usha Chandra, Director of GlobeNet Realty, provides honest and ethical service to her customers. If you are thinking of investing in Brisbane real estate market, or if you are seeking professional property management, then you should contact Usha Chandra today on landline 3865 4466 or mobile 0419 775 416. And for further updates, log on to our website www.globenetralty.com.au. GlobeNet Realty is your own local real estate agency. Situated at Shop 52281 Sandgate Road, Boondall. GlobeNet Realty. Real estate is our world.